webinars. So before going any further, I just want to remind everyone that futures, forex, and options trading, in fact any kind of financial instrument trading, is risky, and therefore you can lose money. So you should only trade with risk capital. It's capital. If you were to lose it, it would not affect your lifestyle or retirement plans should you have them. Please understand that everything we do and say in this webinar or in any medium or in any form of promotional material that you come into contact with is for educational purposes only. Please consult a financial professional before making any investments. And also understand that no solicitation of any security is being made today. Quick note about this webinar: it is being recorded, and all the webinars are uploaded to YouTube and are sent out usually at the end of each week. That can be as late as Monday or Tuesday, since we have my personal favorite, the Saturday morning webinar. And if you, for some reason you don't receive an email with the recordings, please check your spam or junk folder before contacting customer service. So if after doing all that, waiting for the webinars, if you still don't get them and you've checked your spam and your junk folder, then please send an email to customer service at ninjaorderflowtrader.com. Part of the reason I started the YouTube channel was to get the webinar recordings up earlier and to be able to send them out as quickly as possible after the webinar ends. So once it's converted, I just upload it, and there we are. Yeah, exactly, Jacopo. I'm uploading them to YouTube, so you can watch them there as well. But there'll be an omnibus email that gives you all the recordings for the week, and that's usually sent out, I guess usually Sunday or Monday. All right. I want to talk about eBay for a minute. eBay? What's eBay got to do with the NOFT? It has everything to do with the NOFT. Okay. Here you can see, everybody's familiar with eBay. I'm making that assumption. Okay, just to make things easy. All right. All right. We got both bills in here. Excellent. eBay is an auction site. And any of you familiar with market profile, volume profile, and the theory behind that is what we call auction market theory. So essentially, the markets are constantly auctioning. It's like a non-stop auction, okay? And you can have your, we look at the market, we don't believe it's really limited by time anymore. The markets are 24/5. I'm sure at some point they'll go 24/7. But for now they're 24/5 and a little bit depending on what market you're watching, and you can break that up into regular, so-called regular trading hours if you want. Excuse me. But we believe that the market is a constantly ongoing auction, and similar to the eBay site. And there's actually some interesting concepts within the eBay site that are incorporated into the NOFT. Okay. So obviously, you have the minimum bid. I don't know why this is in Japanese yet. It should be in Hong Kong dollars, but whatever may be the case. So here's somebody trying to sell a MacBook Pro. Looks like it's broken. And this is their asking price. All right. And so far they've got 2 bids. All right. Now, here's another MacBook. All right. This is their asking price. It doesn't look like they have any bids. Okay. And so it doesn't look like anybody's willing to pay what this person's asking for at this point, or to even put in an offer. Okay. Here we have another one. another MacBook, and this person's got 2 bids. And now look at this. There's only 4 minutes left now in this auction. Okay. So what's interesting about the eBay site in relation to the NOFT and trading is that, think about this. Let's just say that as we were watching here, it said originally, I believe, 5 minutes or something like that. Okay. So there's 5 minutes left, and now there's 4 minutes. So imagine that this bid for this MacBook is a bar. All right. So you've got a bar. You go to it's not drawing well. Let me get the paint. The good old Windows Paint program. I tell you, that's one of the best programs they ever came up with for Windows. All right, so imagine this particular bar here, or this particular auction, the one with 2 bids and 4 minutes left. Imagine that that's a 5-minute bar. Okay, all right. There's your 5-minute bar. All right, and you've got a couple bids in here. Let's just imagine that they're somewhere in here, okay? And the price point that this user actually wants is up here, okay? So people are willing to pay. They're putting in various bids. I guess in some respects we should look at this as a DOM, really. But just bear with me, and let's just imagine it as a bar right now. And so people are, let's say somebody's bid 5K and somebody's bid 6K, all right, and so forth. And what's going to happen in 3 minutes is if this person has put in a minimum bid, you can do that within eBay. You can tell people that, okay, that, you know, you can put a floor on the minimum bid that you're willing to accept. And how is that similar to what we do in trading? Well, let's say we have a target, or we're trying to go short, and we have a limit order up here. And so what we're saying is we're only willing to sell or exit our long or enter short at that particular price or better. Okay? So unless the market gets there, our limit order is not going to be filled. Same thing on eBay. If you don't reach the minimum bid price, the auction ends and it's over. All right? Does that make sense to everyone? So you can go spend time on the eBay site. I'm not gonna go much further into this, but the concepts are the same for the market. Okay, the market is only going to accept a certain bid or a certain ask price. Okay, if you want to get long, well, you're going to have to pay the ask. In other words, if you want to buy this laptop immediately, well, this is the asking price. That's $61.65. Okay, obviously, yeah, you don't know what the other people have been bidding. Okay, within eBay, all right, or you can. I'm not sure. I'm not a big user of eBay, but the point is that within context of the market, you're gonna have to pay up, otherwise you're not going to get filled. Okay, so you can see now this auction here is coming to an end. And let's watch and see what's going to happen. Okay, either this user's going to get the price that they wanted, or maybe they're willing to accept below that. If they're willing to accept below, it gets sold to the highest bidder. If they're not willing to accept below a minimum bid price, well, then this particular MacBook here is not going to get sold. So I would encourage you to start thinking about the markets and your trading as an auction. Start thinking that you're the one with the conch, okay? You're the one with the laptop, with the car, whatever, and start determining, okay, what's the minimum bid? So start thinking about the market like this. What's the minimum bid I'm willing to accept, or what's the minimum offer I'm willing to accept, okay? And think about this. Imagine you're a MacBook owner, okay, or one of these people here, okay? You've paid a certain amount for this laptop when you bought it, or notebook when you bought it, and you probably have an idea of what your floor is to be able to sell, okay? All right, you probably have a price point that if it goes below that price point, you don't want it, okay? You're not willing to sell, okay? And if you're a buyer looking to buy this laptop, you've probably already done some research, and you've probably figured out what's a fair value for these kind of laptops, given the specs, whatever they are. You probably have an idea if you've done your research, and with the internet it makes it easy. So you probably also have an idea of fair value of what it's worth, but you also have a ceiling on your price that you're not willing to go above. So somewhere between the floor that the seller is not willing to go below and somewhere above the ceiling, or somewhere below the ceiling that the buyer is not willing to pay, there's your fair value. And it's at that price, it's at value, okay, somewhere between these two levels, that most of the business is going to get transacted. Most of the laptops are going to be sold at value. Sure, you may have outliers that are above the ceiling or outliers that are below the floor, depending on what's going on in this auction site, okay, and what the seller has specified and what the buyers have specified. But most of the transactions for these laptops are going to be around a similar price point, and with the majority of them being within a range of value. Everybody's seeing the screen. Is that correct? We just had one person, they weren't able to see the screen for some reason. They probably didn't have Java installed. If you ever get that, if you ever log into a webinar and you don't see the screen, just make sure you have the latest version of Java. Just go to java.com, java.com, download the latest version of Java, and that will probably fix your problem. Hey, Larry. So most of the business is going to be transacted at value for similar laptops, and the majority of it is going to be transacted in what? It's probably going to look like this. It's going to look like a bell curve, or I guess what they call a Gaussian curve. Okay. So value is here for the laptops, somewhere in here. Let's call this the biggest, the fairest price. Okay. 70% of the laptops bought and sold are going to be bought and sold between these price points, between the ceiling and the floor. And anything outside of that are outliers. And so this leads nicely into the concept of auction market theory. It's an auction market, okay? If prices get too high, buyers will usually step away. Prices get too low, sellers will usually step away. Now, the thing is, if we go above the ceiling, okay, so let's say all of a sudden, some major catastrophe happens in Taiwan or China, and all of a sudden you've got shortages of RAM, shortages of CPUs, motherboards, other computer parts. What's going to happen? Well, the prices that people are willing to pay are likely going to go higher. Okay, so if you have a shortage, that's going to increase the reduce the supply and increase the demand. So what's going to happen? The market is going to go higher, and what that means is higher prices are being accepted. Okay, all right, and that's where you get the outliers. So if we move above value, higher prices are being accepted. Now, if we move below value, let's say something else happened. Let's say, I don't know, let's say a country like, I don't know, Bangladesh, okay? Let's say Bangladesh comes out and says, we're going to, all semiconductor companies that come here, we're going to give you tax-free status. Not only that, we're going to subsidize your building of the factories, or we'll build the factory for you. And all you guys have to do is just come in here and make sure that the people have good paying jobs. And so all these companies rush to Bangladesh. They start setting up shop. The prices go down because the cost of doing business there is much cheaper than, let's say, Taiwan or China or or Japan. And so now you get a glut in the market of supply of computer parts, lots of RAM, lots of motherboards, whatever, and the prices start going down. So that means lower prices are being accepted. Sorry about that. Frog in my throat. So yes, we will be talking about we will be moving into the NOFT. But I basically wanted to set the context for what's happening with the NOFT. Okay, what's going on? You know, why is the NOFT relevant to your trading, and how to understand how to use it, and to start thinking like that person who's selling that car or selling that laptop, and that person who's wanting to buy that laptop or buy that car. You still have audio? Test, audio test. You still good? All right. So is everybody with me in this auction market theory concept? Does this make sense to everyone? I guess a big thing. Okay. Yes, it's awesome. Okay, people are finding it relevant. All right. I guess the biggest lesson that you can get out of this, the eBay example that we've talked about, and this concept of auction market theory and having a floor and having a ceiling is this. Have you ever chased a trade? You ever chase a trade? So my question is, why pay up? Why pay up? Okay. Start thinking like that person on eBay trying to sell something and get the best value for it. Start thinking about that person buying something on eBay and trying to get it on the cheap. Okay? So let's move this aside for a minute. And let's bring up the NOFs. Let's bring up here. Let's bring up crude from yesterday. Okay. So here's crude, all right, from yesterday, starting at around the open. Let's see, can I get block trades on here? Yeah, there we go. All right. So here's an example. Here's an example of what we were talking about. Okay. And so what happens? We come up. So what's on the chart here? Okay, we've got the NOFT, and we've got the volume composite on the right-hand side there. Okay. And you can color code that any way you want. You can have it showing as a line like I have here, or as a bar. This is actually a template taken from the member section. Okay. So we actually have the templates. So you don't have to learn how to go through all the all the coloration and all that stuff. I like simple. Does everybody like simple here? Keep it simple, plug and play. That's what I like. Okay. Yeah, exactly. It works for me. exactly, Kevin. Right. Yeah. So, this is actually a template, and you can see KISS method. Absolutely. You can see what happened. Around 11 o'clock, you get this big up move in crude. Okay. If we look back here, you get the big up move. Okay, here's your big up move. All right, and look at what happens as soon as you hit the value area high, which is in this volume composite. You can have this a different color, whatever you like. It's this line here. Okay, and you can see that the profile, the volume composite profile on the side, goes from being this white color and moves into black. That's telling you that we're moving out of value. Exactly. We're looking bell-shaped curve. Exactly, G. They're not all perfect. You can have bell curves that look like a P. You can have bell curves that look like a B. Depends on what the market's been doing. But most of the time you're going to get that kind of bell-shaped curve. All right. So anyway, you can see as we come up to this value area high, what happens? As soon as we hit that, we go up a couple ticks through it and we pull back, and that's a pretty healthy pullback. I mean, that's a 20 tick plus pullback. So higher prices were what? Higher prices were rejected. Okay, we got a rejection up there. So in other words, the buyers, let's say this is all laptops or all cars, all right? Buyers are not willing to buy any more cars or laptops above that price, okay? Because they know that above that price is unfair. It's not fair to buy at this price, okay? So assuming that the people have done their research, okay, you've done your homework on the MacBooks, what they should be worth, all right, you're saying, no, forget it, I'm not going to put my bid on eBay for that much money. That's ridiculous, okay? So the price immediately rejects down, okay? We can look at each individual bar for what we call the volume point of control, or the POC, COT. Some people call it COT, some people call it VPOC, or point of control, okay? And within each of these bars, you can see that that's highlighted in gray, okay? So what happens? That bar pops up, we get unfair prices, back to the mean, okay? We revert back to fairer prices, which within that big up bar is right at that gray level, okay? Obviously we go below that, but interesting how we spend some time in this area, okay? So as soon as we move back to that area, we spend some time in here, okay? Funny enough, within that bar, you can see we have what we call imbalance. Those are green highlighted numbers for buy imbalances and red highlighted numbers for sell imbalances. What that is a multiple of the other side of the trade, okay? And then it automatically colors it in red or green. So what we get here is the price not only reverting to the mean, but searching for buyers. And where does it stop? Where does it reverse? Where there were strong, aggressive buyers before, okay? The most aggressive buy within this bar is that 105. So we return to that 105, and then we bounce, okay? So within these three bars, we've established some kind of value here, okay? So you can see you got the gray cell there, the gray cell there, the gray cell there, the gray cell there. So the market is accepting these prices. It didn't accept the price above fair value, but it starts to accept these prices. So, buyers and sellers are willing to transact some business here, okay? What happens next? We make a second attempt to go above value, and this is important about the NOFT. Here's another aspect of the indicator, what we call auction, okay? Auction are these gold or yellowish lines. The draw isn't staying permanently on here, so just let me, there we go. These gold color lines, those are auction, okay, what we call the auction part of the indicator. You can toggle that, okay? So I can take them off, toggle it, put them back on. The best way to explain auction lines, or what we call unfinished business, is going back to the eBay example, okay? Going back to the eBay example, look here. We have a couple of auctions here. The auction ended, okay, it says this auction ended at 7:35 p.m., okay? This auction ended at 7:42 p.m., okay? So imagine that the floor, the minimum price that the seller was willing to accept, that was not met, okay? What does that mean? That means nobody bid enough to complete the auction for the seller to actually be willing to sell the laptop, okay, or the computer. Does that make sense? So what's going to happen? They can either start a new auction, okay, they can either do a new auction, do a new auction, or they can stand aside and just not do a new auction. Right? Now within the market, it's a little bit different because a new auction will start every time a new bar forms. So going back to this example, we get this line and the market wants to resolve that auction. Okay? The auction lines are significant. Why we have them within the NOFT is because the market will usually return to them at some point to resolve the auction. So how do I use the auction lines? I've mentioned before in the webinars, I usually use them as places to hide my stop behind or as targets, either or. Okay? So what happens? We have an unresolved auction based on that 1109 bar, and that projects this line horizontally on the chart automatically, and it was right at 6,400. The market comes up again, up to 6,400, resolves that auction. In other words, we return to that price. Okay, so somebody was willing to bid high enough, and somebody was willing to offer at that price to resolve that auction, so that line gets canceled out. So you can see how the market was attracted to that line. Again, so this is our second attempt to go above value. Okay, and what happens? We have aggressive buyers coming in, but the price only goes about 6 or 7 ticks higher than the previous high. On the very next bar, there's no aggressive buyers whatsoever. Okay, that's right. The retail flush. Good example, Paul. So they're popping the high here. There's aggressive buyers coming in. Those are the breakout traders. Okay. Yeah, exactly. Breakout traders or stops being run. Okay. And again, the market rejects those higher prices, comes back down on the next bar. There's no aggressive buyers in this bar. Okay. Do you see any green numbers in this bar or in this bar? I don't see any green numbers in those two bars. Okay. That was me, the breakout trader. Oh, is that you, Paul? Yeah, well, that's the thing with the NOFs. You're not going to get caught out like that anymore. Okay. So we know that prices are unfair up here. So what has to happen? You know, if we're actually going to break out, okay, if we're actually going to continue higher, what's going to have to happen? We should see many more numbers in green here, many more aggressive buyers pushing this thing higher. We don't. Okay, we see them positioned in the middle of that bar, and we see nothing above really above the value or high. We see no aggressive buyers on the next bar, no aggressive buyers on the next bar. We have one aggressive seller. Some aggressive sellers slowly start to creep in. This poor guy here, 13. 13. Yeah, exactly. The SQ. Kevin. Yeah, you're right. So this is the person you don't want to be here. Okay. This is a person or group of people. Aggressive buyers, 13, trapped up at the top here. Still trying to buy the breakout, I guess. And what happens? We reject. Okay. Capping is the opposite of the auction. Okay. The reason this auction line was drawn, the one with this arrow here, okay, was because when we look here, if you look at most bars at the top are going to have a 0 and a number. Okay, that means that the auction was finished to the upside, and then to the downside you're usually going to have a number and a 0. That means the auction completed to the downside. The incompleted auction, or the opening or lack of capping, whatever you want to call it, that's the situation exactly that we have here. We had a 24 by 40, okay? And so there's a lack of capping there. And that lack of capping has created a situation, what we call an auction in terms of the actual indicator for it, okay? That's going to be placed on the chart automatically for you. It's going to come up and want to resolve that later, which is exactly what happened. So how are we doing? Is everybody with me? Does this make sense? Right on, Tyrone. Tyrone's like, cut the crap, tell me. So where do I get in the trade? All right. Ed, great. Hey, Edwin. Trader M. Thank you for your screenshots, Trader M. Any of you people who bought the NOF recently, Trader M is an example of, I'm sure he's going to have great success with the NOF. Sending me screenshots and showing what he's doing, asking the questions. Why didn't this trade work out? He's following instructions, okay? Yeah, it's a combination, Nestor. Nestor's asking, getting in the trade depends on your homework levels. No? Yes, homework levels are important. They are very significant, and you'll learn how to do those in your live training sessions, okay? You get, with the full payment purchase of the NOF, you get 2 live training sessions, and you'll learn how to do that. However, I would add to that your levels have to be taken in context. In terms of this, this is just an example of us using the concept of auction market theory and using the indicators within the NOF, like the volume composite, like the auction, for us to develop a high probability trade setup. Now, I've shown you lots of videos and we've had lots of webinars where I've demonstrated how you could short in this area. Okay. Today I'm only going to talk about the retracement trade. All right. Remember, part of what we talked about earlier with the the auction market theory is no chasing. Start to think like the person who's wanting to sell that laptop, or start thinking like the person who wants to buy the car, okay? So where, looking at this, there's only two real possibilities I see for shorts. When I'm looking at this, I don't see any stacked imbalances in here. In other words, I don't see a bunch of red numbers stacked together when we make this initial move down. However, there is one that should stick out in everybody's mind. And that's that 100 there. We got a big sell imbalance there. Okay. Anywhere within this 3-tick radius is your entry. And then watch what happens. You got 2 opportunities. One here and one there to short this market. Okay. Your live training sessions, Trader M, it depends. Somewhere between 1 and 2 hours. I mean, the last one that Kai did, I think it was like 2 hours and 45 minutes. It was awesome, by the way. So there's your entry, and I mean, what's the unfortunately, my problem with this trade would be that I would think you'd probably have a wide stop, and for us using the NOF, wide stops is anything over 6 or 7 ticks. So counting this, just from that price point, 1, 2, so 1, 2, 3, 4, 5, 6, 7, 8. So it would be an 8-tick stop. Okay. Yeah, Ivan, it's taking it within context. Obviously, the market is going down. Higher prices have been rejected, right? We rejected value area high. Okay. Higher prices rejected up here. We don't see any aggressive buyers in any of this. We do see some aggressive selling. Okay. So I want to get in behind the heavy seller. Okay. I want to get in behind the biggest one that I can find to give me that edge. Okay. And that's exactly what this trade does with a minimum amount of drawdown. I mean, if you went in just below that 100 or at that 100, your drawdown on this trade is 2 or 3 ticks. Okay. Yeah, you're right, Trader M. But I'm just, there's lots of new people in here who aren't familiar with those kind of advanced entry techniques or aggressive entry techniques. That's the only reason. Trader M saying, why didn't you go short up here, right? Or somewhere here. Right? Well, it's a little bit more advanced, so I don't want to get into that. We've got so yeah, I've gone over the entry, and I mean, look at what this trade does. So if our entry is 63.80, how do we trail? How do we trail it? Tyrone's got a good point. Okay. Yeah, we can reduce the size of the profile if we want. Etor, if I'm pronouncing that right, Etor. We can make it bigger, make it smaller just by left clicking and dragging it. Okay. So how would I exit this trade? It depends what you would be looking for, Tyrone. Okay. If you're looking for a big move, or you're just looking for a 10, 20 ticker, 30 ticker. But I mean, this from 63.80, I can show you exactly right here. Okay. There's an auction line up here. Okay. There's another one here. So immediately, once these auction lines form, my stop is 1 tick above the auction line. Okay. Yeah. When you get in the trade, okay, we've gone over how to get in. How do I pick the exit? That's what we're going over now. Okay. So I'm trailing my stop behind the auction lines. So I actually would have been stopped out here at 63.41. Make sense to everyone? See how there's a gold sell there. There's a gold highlighted sell at 63.40. Okay. No, I wouldn't do if I'm short Etor, I'm trailing behind the auction lines that are at the top. Okay. If I'm long, yeah, I would be trailing the auction lines that are below. Once the unfinished business on auction, isn't there a chance for the market to revisit it? Yes. It's something that you'll see over time, Trader M. You'll see over time that when the market's in an uptrend, you'll see that the auction lines will be left behind, and then they'll be revisited later. So that's the reason why if I'm short, I trail behind the ones that are above, and if I'm long, I trade the ones below, or trail the ones below. Good questions, guys. Love it. Yeah, going back to your comment, even so I don't need a minimum of 2 aggressive sellers for the retracement. Yeah, you have to take it within that context that we did reject higher prices up at the top of the value area. Yeah, ideally, I like to see what we see, for example, in this bar. You know, there's a group of aggressive sells, group of aggressive sells. I like to see that, but when you don't have it, you have two choices: either skip the trade altogether, or look for the most significant one. So in terms of levels, Kai's actually been nice enough to post the levels for tomorrow. Let me know if you want the mic, Kai, just to talk about them. Oh, very good, Edwin. Thank you. I'm glad you like the explanations. So Nestor was talking about, homework levels. Okay. Just here's gold. Okay. Let me see. We've also got crude. It's this one, also gold. Okay. All right. So Kai's actually posted some of the homework levels. So make note of these levels and then see what happens tomorrow. Okay. 62.93, 64.17, or is it 64.10? Or 64, yeah, it looks like 64.10. So 62.93, 64.10, 66.22. Do you have any for the ES, Kai? Elaine's asking about the ES. All right. So crude 66.22, 64.10, 62.93. Yes, it's posted. Okay. I only see. Here we are. Okay, let's go to the ES. ES homework levels for tomorrow. To the downside, 2028, 2034. Looks like 2040. 2050 half, 2064 half, 2069. So 2069, 2064 half, 2050 half, 2040, 2034, 2028. I did trade the ETF before, Keith. I'm mostly sticking with crude and the ES right now. Yeah, I think it can, Nestor. All right, and yeah, so gold, levels on gold, 1234, 1205.9, 1200 even, 1196.4, 1193.3. Norman, why do you use different intervals for these instruments? Yeah, that's a great question, Norman, and it actually can lead into what what we can talk about. So let me go back. Yeah, David. The threshold is the threshold is 300 on the 300% on the imbalances, and then on the zones, I've set them to 500%. So the zones will be different from the actual numbers. All right, so let's go back to TP's question first. got levels for 3 markets tomorrow, and just watch what happens at those levels. So TP is asking, what makes aggressive sells? I see bigger number than those. Okay. It's relative to the other side, TP. Okay. All right. Okay. So in order to get a red number on this chart, I've got it set to 300%. Okay. So let's just take a simple example. Here we've got a red 8. That's actually looking diagonally to the 2 there. Okay. Right? So in other words, 2 times 3, or what we would say 300%, 2 times 3 would be 6, right? So anything greater than or equal to 6 is going to create a highlighted red number on the other side, and vice versa on the buy side. So for example, you've got down here, you've got a, let's say right here, you've got a 64, okay? Well, that 64 is actually looking at the 3, okay? On the other side, one level below on the other side. Okay, so 64 is looking at 3. Obviously, 64 is multiple times greater than 3, and that's how you're getting that number. So you can set that to whatever you want. Again, this is just a template, okay? And it's automatically set to 300%, but you can set it to whatever you want. Obviously, lower settings are going to give you more highlighted numbers, and higher settings are going to give you fewer highlighted numbers. Good question, Ivan. Can you show me exactly what I must be looking for if I come into a homework level or another area? What do I need to see first? When can I enter the market? So can you explain the workflow for me? I'm a little bit confused about that. Okay, excellent question. I did a webinar on this actually. Let me see. And there's lots of indicators within an OFT, and judging by the questions and the people in the room, I'm probably not going to be able to get into all of those today, which I'm totally okay with, because the questions you guys are asking are really great. This is what I look for, okay? This is what I look for, okay? So obviously, as Ivan mentioned, the levels, okay? And you learn how to do those in your live sessions, okay? So obviously, the first thing I'm looking at is a level. Do I have some kind of significant level? And that can be any level, It doesn't have to necessarily be our homework levels, although our homework levels work very well. So I mean, if you're a fib trader, pivots, Elliott wave targets, what else is out there again? Whatever it is, you got to have a level, okay? Support resistance. So in other words, previous high or previous low, and we come into that area. Yeah, that's significant. All right. So the second thing I want to look at when we come into that level, and it's basically this is the checklist. Okay, I'm giving you the checklist. So when you purchase the NOF, you want to trade like me. Okay, fine. Well, it's very simple. Aggressive buys or sells. Okay. Okay. So in other words, do I have red highlighted or green highlighted numbers? Okay. The next thing I'm looking for is what we call block trades. Okay. Those are trades of a minimum size or greater. Okay. And those lines are placed on the chart automatically, just like the auction lines. Okay. the next thing I'm looking for is, do we have a zone? Okay, do we have what we call stacked imbalance zone, or a block zone? Okay, so what stacked imbalance zones are, those zones will also be drawn on the chart automatically, is taking the concept of imbalance, which is those aggressive buyers or sellers that are in red and green, and then that's the criteria being sought is, are there aggressive buys or sells stacked on top of another, so within sequence. So so let's say I have a 24, 52, and a 36, and all of these are green, and they're all in sequence, in other words, one price after another, then a zone is going to get drawn on the chart, and we'll look at that later. But I'm just giving you kind of the algorithm, the sequence, what I'm looking for to address Ivan's question and other people's questions about that. What are you looking for? Okay. In the first example, we talked about it already. Sometimes you're not going to get that kind of stacked imbalance zone. So I will have to look at, okay, well, higher prices were rejected. I do have an aggressive sell, at this level. Do I have a reasonable stop? Okay. Yeah. All right. So block trades, I'm looking for those. I'm looking for stacked imbalance zones or block zones. Block zones, just like the block trades, it's a trade of a minimum size or greater. Okay. So for example, on something like crude oil, maybe I've got it set to 24. Okay. That means an order of 24 or greater has to come through the market in order for a line to get drawn on the chart. It can't be 6 by 4 or 4 by 8, or pardon me, 3 by 8. Okay? No, it has to be somebody willing to actually put an order through of 24 or greater contracts, and then that's going to draw a block trade. And then a block zone, well, we'd have to have a 24, a 24, a 24 or greater stacked on top of one another within sequence, sequential prices, in order for that zone to be drawn on the chart. So and then finally, what am I looking at? I'll look at a combination of auction and or the reverse signal indicator. Okay. All right. So I mean, if I have 3 out of 5, I'm willing to take the trade. 4 out of 5, better. 5 out of 5, great. But these are I'm only looking at a few things. The mind can only concentrate on so many things at once, and so basically, I'm looking at these things and then deciding, okay, well, what do we have here? Do I have a trade? Okay. It doesn't need to be long or complicated. We talked about earlier about keeping it simple. Well, this is basically a checklist that I went over in another webinar. Okay. And so you pick, the NOFT is customizable. Okay. All right. And you pick, what you find relevant, what you like. Okay. What's relevant to your trading. Okay. So I hope that answers that. Gene, regarding the homework levels, Gene's asking, why doesn't the NOFT calculate the homework levels that Kai gave us automatically? That's in the works, Gene. What's actually going to happen is, for certain markets, for example, crude, probably the ES and maybe one or two others, Kai will actually be able to put the levels on the chart, on his charts, and then it will automatically show up on your chart. Okay, so that's in the works. Norman, your question regarding different intervals for different instruments. It really depends. Well, actually, it's independent. It's independent, okay, of the time frames. So, for example, you can adjust the the profile that you're looking at, and you can have a static profile. You can have the volume composite. You can have just the value areas drawn on these charts, and you can decide, whether you want that profile or the value area, or whatever it is. You can decide whether or not you want it based on days, hours, minutes, seconds. How many days you actually want. So it's really independent of the chart that you put it on, because you're looking at volume. Okay. As part of finding the homework levels. Earlier trades in crude, I did show one that I saw there, Bill. But I'll look for others as well. Sorry, I'm just reading the questions, guys. This is great. I really like it when we get these thoughtful questions. Yesterday and today on the TF, the COT was stuck in the middle of the footprint with price cycling up and down. On what chart, Doug? I don't have a TF chart up. With price cycling up and down with the bias to one direction. Where would you find an upper if COT never shows declining interest scenario? Yeah, I'd have to look at the chart, Doug. But the COT is only part of it's only part of the algorithm, okay? At least for me, all right? The checklist that we just went over, I mean, I'm not just going to be paying attention just to the volume point of control or the COT. I've got to have these things. So these things are going to give me the context, okay? And you are absolutely right. Sometimes Doug is talking about a decline. I'm assuming a sequential decline in the buyers or sellers. Is that right, Doug? If you don't have that scenario, that's why I look to these other things, because you're not always going to get that sequence. So that's why I have to look at other things. I hope that addresses it adequately, but very, very good, thoughtful question. What is set at 500%? Elaine, the zones, the stacked imbalance zones that I have, I've got them, I believe I have them set to 500%. The imbalance zones are in what we call the I ghost block indicator. The I ghost block indicator is what's going to draw your stacked imbalance zones and your block zones. So unlike the regular imbalance that I've got set to 300%, I've actually got the zone set to 500%. Okay? But other than that, it's just the template from the members section. Do you want me to take trades off the 3-minute or a tick chart, say like 466? Yeah, it doesn't really matter. You're right, Kevin. It doesn't really matter what chart you trade off of. That's going to be independent for each trader. I've got 3-minute charts. I've got a 15-minute chart up. It really depends on your preference. I know guys who are trading the NOFT with range bars. I've shown plenty of examples of that in previous webinars. So you can trade, and even custom bar charts. You can trade off custom bar charts. The NOFT will work on those too. I've tried that. Yeah, it is diagonally. You're looking at that because the TP just commented about the, why is the imbalance looking to get the imbalance? Why is it looking diagonally? And it goes back to the auction, right? There's a certain price that a seller is willing to allow a buyer to buy at, which we call the ask, right? Okay. And then there's a certain price that a buyer is willing to buy for, which we call the bid, right? And those prices are not the same, right? In other words, to buy, you've got to buy at the ask, okay? And to sell, you got to sell at the bid, okay? So good. Can you go over NOF standard deviation, if possible? Trader M. Okay, yeah, we'll look at the standard deviations. And actually, I guess, Kai, are you still with us? Because I know we've got something in the works for standard deviations. Anybody trade options or look at the deviations at all? We've got something coming up. Well, there's two things coming up that I'm going to talk about that are going to be new within the NOF. We haven't even gotten into the entire NOF, but yeah, Jacopo, the ghost block zones. I've got the stacked imbalance zone. I'll just go into it one more time. I've got within the ghost block, you've got stacked imbalance. And then, yeah, I've got the threshold set to 500. Okay. For the CL on the ES, I haven't changed it yet, but I'm probably going to. The ES, I still got it set to 300. Standard deviation, good. Well, that gives us an opportunity to go into more indicators that are included in the NOF. Here's crude oil. Just going to take all the drawing off here. All right. Standard deviation. All the NOF indicators have NOF in front of them. Okay. So whenever you want to put a NOF indicator on the chart, you just go down to your ends, and then you're going to find all your NOF indicators. So settlement deviation. So what we can actually have is an indicator we have called settlement deviation line. And so from the settlement price, that's actually going to draw deviation lines on the chart. Okay? And you can adjust what kind of deviation you want. So here's a 0.8. I'll put a couple of them. Let's change this one to, let's say, 2. And let's change the color on one of them. Let's change it to, let's say, green. Hit OK. All right. And so what we've got now, sometimes you might have to reload the chart if there's, you might be missing some data. As you scroll back, we've got settlement, the deviation line, okay? And then I've got a 0.8 and a 0.2 deviation line put on here, okay? So any of you who trade options, okay, we have we have deviations, and a lot of the algos are written off certain deviations. We go one standard deviation or 2 standard deviations out. A lot of the algos are written off the deviations for statistical purposes, and oftentimes you'll see the market react at or very close to the deviations. Okay. So again, you can adjust that automatically for whatever market you're looking at. But if you need deviation lines put on your charts, or if you're trading options, yeah, you can just check out the YouTube channel, Ivan. Okay, 30 to 90 days worth of data. Yeah, so on the homework levels that Kai identified for us, okay, he's put in here he's using 30 to 90 days worth of data. Okay. Norman's got another great question. How do you handle auctions on both sides of the current price? Is there a bias in one direction before the other? Yeah, that's Norman's saying, okay, well, what if you have an auction line on both sides of the price? Like, for instance, you know, here's a good example here. We look over here. You've got auction lines above and below. Well, again, it's taking it within context and then looking at what's happening inside each bar. Okay, that's why our theme is look inside the market. Well, that's exactly what we're doing. We're looking inside each candle and seeing the actual volume on the buy side and on the sell side. So remember, we sold off, and now I already told you I would have been out with 39 ticks there. Okay, and that's an example where you have auctions on both sides. All right, we come back up. Okay, and what happens? Sellers start to show up again. More sell, more sell, more sellers. What's the probability? We have auction lines below, but the probability here is that we're going to continue in the direction of the trend, which is exactly what happens. And you could either wait for that continued breakdown, all right, and then trail your stop behind the auction lines, or you could wait for the breakdown and the retracement. And look, we retrace right back to this stacked. There's actually a stacked three. There's three stacked aggressive sellers here, 27, 9, and 2 in red. And then we go down. We continue down from there. So it's taking. I guess the long and the short of it, Norman, is you're taking it within context. Okay. If I've got auction lines on both sides of the market, and we're in a downtrend, it could just be a pullback. Okay, which is what we see here. All right. So I have to look inside the bar and make a determination, based on the imbalances, the block trades. Okay. Make a determination. It's not just any one thing. It's think of it as being like a lawyer. Okay. Or a police officer. The whole idea is to gather evidence for your case. Okay? If there's not enough evidence for your case, step aside. Okay? Don't take the trade, right? So here's your evidence checklist. Okay? Do you have a level? Do you have aggressive buyers or sellers? Do you have block trades? Do you have an imbalanced zone or a block zone? Do you have the reversal indicator in your favor? All right. You have said that we have a one-on-one later, so I have Lisa Knopf. Is this one-on-one after a 2-week trial? The there's one-on-ones, and then there's your live training session. Okay. The one-on-one is if people are serious about getting them off, and maybe they're shy, or there's some personal aspects to their trading that they want to talk to myself about before they complete the purchase. I will do a one-on-one with them, get a feel for what they're how they're trading, what markets they're trading, how long they've been trading. Maybe they want to look at some specific market. Okay, I'll do a one-on-one presentation with them. If you make the full payment purchase, you get 2 live training sessions with Kai. Okay. If you do the lease option, you only get 1 training session with Kai. Okay. So that's how one-on-ones work versus the live training session. So I hope that answers that. For homework levels, how do we decide on which profile intervals to use? Well, as I mentioned earlier, Norman, the homework levels, 30 to 90-day profile, really. That's what we're using. So you can have a profile. You can have a profile, for example, the static profile, just a one-day profile, and then you can have the composite for multi-day. I see the NOF shows the market in its transparent state. We can see how the big boys orders, we let them get the market going, and then use the NOF tools to see where there's a trade to be taken. Paul, you got it. Read that again. I see how the NOF shows the market in its transparent state. We can see the big boys orders, and we let them get the market going, and then use the NOF tools to see in there or where there is a trade to be taken. Absolutely. I couldn't have put it better myself. Thank you, Paul. I mean, that's really what we're seeing. I mean, if we go back to the original example today, if we go back to that, we see there's some big activity in here. There's some big volume happening in here, and there's some aggression on the buy side that is not respected. Okay, so be mentally flexible. Think, okay, if yes, then what? If no, then what? So if these aggressive buyers up here cannot push the market higher, what does it mean? And not only what does it mean within the context of what we see here? Top of the value area. Nobody wants to buy the MacBook at the top price, at the highest price. Okay? So even though there were aggressive buyers willing to pay the top of value, there weren't any aggressive buyers willing to pay above value. They dried up, and you can see it on this bar, and on this bar, and this bar. Nobody in here is aggressive enough to push this market higher. So awesome comment, Paul. Is there going to be a Christmas sale for NOFT? No, Mike, but the NOFT will be going up, I believe, January 1st, because there's going to be additions to it. Okay. And I'm going to talk about, you actually gave me a great opportunity to talk about the additions, okay? And one of the indicators that we haven't really talked about today. One of the indicators we have at the bottom here, it's called the NOFT reversal signal. Okay. Now there's a bunch of criteria within this particular signal. Okay. The whole idea of it was to actually have it be traded as an algo, but that's another story. The point of the matter is that, again, taking things in context, I look at this when I have a level and we come into that level, and if I've got the other things that we've gone over in the checklist, okay, is everybody seeing the checklist? Just want to make sure there's not a lag here. Everybody seeing the checklist? Yes, no? Okay, good. Okay, good. Good. So I look at that indicator when we come into the level, and if I see what I like to take the trade, the reverse signal helps me and gives me a heads up. Now, what the reversal signal is looking at a bunch of things. I'm not going to go into them, but essentially, if price gets away from value, okay, if we get a few ticks away from value, in other words, if we go in the opposite direction, away from value, the COT, all right, then I'm looking to take a trade, okay. So one of the additions that's going to be happening that I think is really cool is you're actually going to get a box drawn by this indicator, okay. So the box is actually going to be drawn when you get me see, Control F12, I think. Yeah. So let's say we get this green buy here. Well, it's going to draw a box, and that box is going to be a certain number of ticks wide based on the positioning, okay, of value. And then you're going to have an entry as soon as you tick above that box, and your stop just below it. Okay. So that's one of the additions that's going to be made to the NOFT. So everybody who's already got the NOFT, you'll get that upgrade, and everybody who's going to be purchasing it, well, that's going to be part of it. I think it's going to be finished probably very soon, probably at the end of this month or before that. But anyway, yeah, in 2000, the bottom line, 2014, the price is going up. What is standard deviation? Yeah, standard deviation is, I think we went over it, but it's from the price point. It's drawing standard deviations away from that. Okay, so we talked about the profile, right? So here's your standard distribution bell curve. So here's, one, let's say, okay. So here's your standard distribution bell curve, okay? Here's the mean. Here's within one standard deviation. So within 2 standard deviations, and then your 3 standard deviations are outside of that. Yeah, I mean, the purpose of the deviation lines, if we know that the Trader M is asking what's the purpose of those lines, if we know that algorithms and HFTs, okay, if the algos and the HFTs, if many of those are programmed off of standard deviation levels, then usually you're going to get some type of reaction when we come into that level, okay? So useful to have in terms of giving you additional levels to look at, okay? And let's say you have a homework level, and then you also have a standard deviation level, and then the market comes up, and as we come up into there, the aggressive buyers disappear. You get block seller lines coming in. You start to get aggressive sellers coming in. Hello? Short, right? Again, gather the evidence. The NOFT makes it visually easy to do that. Okay? Whether you're using the standard deviation lines, whether you're using the profile, the NOFT is going to, by seeing inside what the market is actually doing and where the bigger players are positioned, you're getting that edge. And I mean, remember the example I said, on the first trade example, I said you have to have an 8-tick stop, and that's a big stop. For us, that's a big stop, Okay. Are these live training sessions during good trading hours? I believe they're during regular market hours, Steve. I think they're at 12 noon Eastern. Yeah, the sessions are during live market. Yeah, I don't want to go into too much, Tyrone, about the homework, okay? That's for the people who've purchased and are actually going to do their sessions with Kai. I see the NOFT can keep your emotions in check. No more puckering. Yeah, exactly, Paul. My signature trade is the retracement trade. Okay, I like to see retracements. Okay, so I'm not chasing markets that way. So yeah, that's a big deal about the NOFT, is helping to keep your I mean, it's either there or it's not. You either see the buyer sell imbalances, you either see the block buys or block sells, you see the reversal indicator, or you don't see it. So I've given you a simple algorithm to follow today with that checklist. Igor, can you consistently make money with this, or is this just another one-hit wonder? I don't think I need to say it. I let the members. They can speak for the NOFT. Okay. I will say, and Kai has said it as well. The number of people using the NOFT and having success is a very high percentage compared to what I've seen before. If we lease first, do we lock in the purchase price at the time of the initial lease? Yes, Mike. If you're leasing and price increases, yeah, you locked in at certain current price. Yes, I believe that's true. Okay, 3%. Great. How many live training sessions can someone participate in order to understand everything? Well, you get the two live ones, Edwin, and then the rest is we've got over 30 hours of video in the member section, okay, and some of that is actually the live recorded sessions as well. There is a 14-day no questions asked money back period. Since you guys are kind of asking those questions, I'm going to show you the members area and also the order page. All right, so here's the order page. And it gives you a description of each of the indicators. The order flow sequence tracker, that's the core of it, okay? We've gone through that today. We've talked about the ghost blocks, the reversal signal, the volume composite, okay? The tracker, we haven't talked about that, but we talked about settlement deviations. So there's lots in there for you, okay? So if you purchase the NOFT Ultimate Lifetime License, okay, it's $34.99. You got a 14-day, no questions asked, money-back guarantee. All right. All the indicators that are on the page, the on-demand video library, over 30 hours of video within the library. I'll show you that in a minute. You get 2 group live over-the-shoulder trainings with Kai. Okay, those are the live training sessions. All right. All new version upgrades, software editions, and educational editions. Lifetime license, pay once and use it for life. All software upgrades are included, and you can use it on 2 computers at no additional cost. You just can't use them concurrently, okay? So you can't have 2 computers running at once, both running on off at the same time. Now, if you want the lease option, it's essentially the same, except you're doing a $499 down payment and $199 the first month, and then just $199 after that. Okay. The $499, if you decide that you want to upgrade to the lifetime license, the $499 can be applied to the cost of the lifetime license. Okay. And you can keep it that way, or you can cancel at any time. Okay. But you only get 1 group live over-the-shoulder training with Kai. Oh, good, Chris. You already bought it. Excellent. Just buy it. I have spent thousands of dollars on crap. Trader M is saying, just buy it. I've spent thousands of dollars on crap. Thank you, Trader M. How much is NOF versus lease? Okay, we've gone over that. Per week. Okay. So that's the order page. I'll cut and paste that into the chat along with my contact information on the YouTube channel. I've really enjoyed this webinar today, guys. I really appreciate your questions. They've been thoughtful and helpful. And let's go to the member section. Is there a is there a monthly? Oh, people are asking about data feeds. Data feeds. I'm using CQG data feed from AMP. Do you think DTN-IQ is better than CQG? I do. I think DTN-IQ feed is probably the best data feed available in the retail space out there. But, you know, CQG is not bad. Run it as a business. If you're making money, invest in the IQ feed. If you're not making money yet or you're trading sim, just go with your demo feeds, okay? So in terms of a monthly fee for the feed, Tyrone, what you can do is you can go to any NinjaTrader enabled broker, and usually you can set up a demo account so you get free data for at least a couple of weeks or a month. So you could theoretically go from broker to broker doing that until you're ready to trade live, and you'd have free data that way. The price increase in January is going to be somewhere between 500 and 1,000 US dollars minimum. But there's no unless you're doing the lease option, there's no ongoing fee for the NOFT. Okay. Any discount if you want to run two computers simultaneously? Yes, Gene, there is. There is a discount for that. Email me. So if you need to run two NOFs concurrently, we can get you a license. Just email me for that, and then I'll forward it to the appropriate party. Exactly, Steve. Don't say crap, say rubbish. Yeah. Trader M's right. You can't say crap, I have to say rubbish. Yeah, the lease locks in the current price. Aaron, or Irvin, pardon me. Can you backfill with CQG data to receive end-of-day corrections similar to IQ feed? No, as far as I know. And the NOFT does not have the ability to backfill. We could have done that, you know, and the backfill, all the backfills are usually based on up-down tick. I know that's how one order flow tool out there does that. But what the NOFT is doing, it's actually, it creates a folder within NinjaTrader, within the NinjaTrader directory, and then it records all the bid-ask data into that directory, into that folder. Okay. So essentially, if your computer's turned off, yeah, you're gonna miss that data. If your Ninja is exited, you're not gonna have that data. However, it will, if you do run the market replay, it will backfill it. Okay. So obviously, if you're running market replay, it's going to fill that going forward. So my solution, okay, and it's not a problem with NOFT. It really has to do with NinjaTrader, and I know NinjaTrader 8 is supposed to address that issue of being able to download the bid-ask data or storing the bid-ask data on your computer. But hey, when is NinjaTrader coming out? Who knows? So for now, what I do is I leave my computer running during the week, and then I turn it off on the weekends. That's basically it. And I have a power bar so that if I need to go out or I need to be away from the screens, it's got multiple buttons on that power bar. So I have the monitors in certain sockets. So I just press one button, my 2 or 3 monitors turn off, but my computer's still running. Storing that. I'm not using CQG data. I'm using Kinetic Al, which is the next best thing to DTN IQ feed, because Kinetic is actually DTN IQ feed white label, I believe. But yeah, there's lots of CQG enabled brokers out there, so you can sign up for a demo account and then use their CQG data. All right, so this is the member section. So regardless of what it says here, I forgot to email them about this. Regardless of set here, the first thing you want to do, number one, when you become a member, is go through all the videos in the video library. That is number one, okay? So many of your questions are going to be answered within the video library. So when you log in, never mind this, click on video library, okay? So we click on video library, and we got over 30 hours of video, okay, included in the library, NOF product presentation, upgrade, advanced product education, getting started, importing your chart templates and workspaces, first steps with the toolkit, footprint basics, bid-ask ladder basics, learning how to read the footprint, institutional order flow basics, getting an edge using order flow and knowing where the block trades are, learning how to use the order flow sequence tracker, block trades and data reporting, discover an edge in any market, learn how to use your tools, institutional signal reading, the reversal signal generation, practice trades, reducing risk, sequence tracker block trades with order flow, training sessions. There's 13 videos alone within the training sessions as well. So once you've gone through all the videos, you've taken notes, you've wrote down your questions, then you can click on NinjaTrader Files, and you have the choice of downloading the entire toolkit. That's what we recommend. Just download the whole toolkit, install it, and if you scroll down to the bottom here, all the templates. The template you saw today that I'm using is just a template, okay? Keep it simple. Cut and paste, cookie cutter, all right? So you can download the chart templates. If you've seen Kai's personal chart templates, you can download those too. They're available in here. We've got workspace downloads and as well filter settings for particular markets. Yeah, Bill. That is my solution. How's the only way I save electricity, save my screens, but still get all that data? That's basically it. I got a little power bar tower. I got my monitors plugged into one section of that, so I just press one button, and then all my monitors turn off, and it's a good solution for now until NinjaTrader 8 comes out. It's a power bar. You plug it into the wall. It's got multiple sockets, but it stands vertically, and then there's 4 or 5 buttons on it, and at each level there's multiple sockets, and then I just press the button on the level that the monitors are plugged into. AKA Surge Predictor, Power Strip. Yes, thank you, Kevin and Trader M. I only run 3 monitors, Gene. I think you probably only need 2, unless you're trading multiple markets. All right, so that's it, folks. The order page, my email, and Skype are all in the chat. You're welcome, Gene. Not a lot of trade examples compared to my usual webinars, but I think we did well. Good night, Ivan. Learned some new stuff, and thanks. Great, Chris. You're welcome, Bharat. Welcome, Ralph. RB. I always learn something new. That's great, Trader M. That's great. Welcome, Bruce, Norman. All right, take care, everyone. I'll convert the webinar. It should probably be posted on YouTube in an hour or so. Welcome, Kevin. Welcome, Nevin. Thanks, Edwin. Vincente. Tyrone, TP, thanks for your questions. Bye for now.